Hey everyone, and welcome back to the Biz Beat by SVA, the podcast that helps business owners stay sharp when it comes to taxes, business trends, and important strategies. I'm your host, as always, Lee Schwartz, Director of Business Development and Sales, and always joined by Eric Trost, Tax Principal and President here at SVA Certified Public Accountants. Eric, how you feeling this week? You ready to get going?
I'm ready to go. How about you?
I feel great. There's, as always, a ton of news to talk about. If this is your first time listening, each week we break down a key business or tax issue. We will update you on the status and the details of the upcoming tax legislation, and we will answer a real question from our listener mailbag. So let's jump in. Eric, we've talked about it a bunch, but we're going to get right back to it. Just in the last just few hours, really, there's been some discussion about an agreement, at least on a framework of a deal with China. Can you talk a little bit about that? And then we'll jump into some other economic news in the out there today.
Yeah. So just tweeted today, and it's not really tweeted because it's Truth Social.
It's a
and
truth.
Trump has put something out there. Yeah. Have we decided what we call those yet?
It's a truth. It is a
It's
truth. I believe it is a truth.
With a capital T or just a small t?
I think it's all caps. Knowing him, it's all caps.
Super truth. So anyway, Trump put a truth out there today, today being Wednesday, that he's reached a deal, or the United States, I should say, has reached a deal with China, and they've set the tariffs being 55% on China and then 10% on U.S. goods going into China. So I want to talk a little bit about the 55% coming to the U.S. Those tariffs really had been all over the place, and what it looks like is they're settling on this flat 55%, which might be additive. We have to wait till the details come out on this, but might be additive to some other tariffs that were already in place for specialized products. So what we'll look at when the details finally come out is how across the board this 55% is, and if it is additive to some other tariffs that were already in place. Now, what Trump said in his truth is that the deal's reached, but then he said it's, subject to approval by the president of China and in himself. So there are some details to be worked out yet. And I don't know, sometimes those details might get in the way of a final deal, or maybe those are details that they're going to finish up. But it looks like at least Trump is very optimistic that soon we're going to have this deal ironed out with China, and then can move on to other countries, because I think China is one of the countries that they were using to set a baseline with on how other countries are now going to fall into place in their tariff negotiations.
And Eric, if this is a done deal, if it does end up that way, this is a huge deal. I mean, this is you think about them as big of a trading partner as they are, and as we think about our clients and how many of our clients are sourcing products from China, like this potentially provides some clarity into the future. Is that right?
Yeah, I think that's what they're trying to get to here, and we'll see how the markets ultimately end up reacting to this, because that's a good gauge as to how business leaders think of these things. But you would think that if you can get some stabilization with this tariff with China, which is one of our biggest trading partners, and certainly we are China's biggest trading partner, if that adds stability to the market, you might see that come through in the next couple days here.
Okay, well, we'll stay tuned for that. And Eric, the other big news just today is new inflation numbers coming out for the month of May. Can you talk about that and what that is telling us?
Yeah. So there was inflation numbers released by the CBO today that were at 2.4% inflation, which is not a significant high number. So that's 2.4% annualized. And that's not a very high inflation rate. That means a couple things. One is, at some point, does the pressure on interest rates come down, which all businesses would like that. So the borrowing rates. That also helps from if your country happens to be running a deficit, that also helps your interest rates on a deficit that might be out there. So to those that are in debt, seeing a low inflation rate generally is good news, because that means that the pressure on interest rates probably starts to come back down instead of rise upwards. And then that reverberates through the whole economy, because it's not just interest rates then on, those bigger items, but it goes down to mortgages and credit cards and everything else. So seeing a low inflation rate is generally good news for the economy, not a negative, but a low inflation rate. It also means, though, that the previous tariff wars have not yet impacted how inflationary some predicted they were going to be. The tariffs as of yet, and maybe it's still got to come through the system, but as of yet, those tariffs have not really hit hard in the inflation numbers.
It's interesting, and like you said, I know neither one of us are economic professors or researchers, but you would think that would have shown. And I know the things that we've read are everybody was a little surprised that inflation wasn't higher than it was.
Yeah, well, you know what they say: if you get like 10 economics guys in a room, you end up somehow with 11 different opinions. So
fair enough.
I think that, right. I think everyone has their opinion on it. There was a lot of opinions that inflation would hit harder and faster, but it clearly hasn't come through, at least in the current numbers.
Okay. Well,
the other thing that's happened, though, is that there's been some revenue raised from the tariffs. And I don't know what the impact is yet on those, other than the government's announcing that its funds that are coming in are 10 to 15% higher than last year's funds that are coming in, and higher than projections. And that leads to another thing in what's happening, which is there is the tax bill that's out there we've been talking about. And within that tax bill, there's also an ask from Congress for a debt limit increase. They want to increase the debt limit between $4 and $5 trillion. Without that debt limit increase, the government runs out of money and they have to renegotiate, and that gets to the negotiations regarding government shutdown. We've probably seen those in the past, and each side takes a stand, and somewhere along the lines, they finally get to an agreement on it. What they're asking for now with this 4 to 5 trillion increase in the debt limit, which is going to run out about the end of August or so, is a prediction right now. So maybe they bought a little more time to pass that debt limit, which also means they bought a little more time probably to pass this tax bill, which is going to add to the ultimate debt. So they've got to get this debt limit passed in conjunction with passing this tax law effectively, because the tax law is expected to increase the deficit. So we'll probably see both of these pass. Again, Trump wants them July 4th, so that maybe he can sign the bill under the night sky and fireworks. But they do have more time than that from a debt limit standpoint to pass this bill.
So it's interesting from a political perspective, because that pressure to pass it is probably something that in some ways Trump would like, but obviously also good news that there was more revenue than expected, and maybe they have a little bit more time. So let's get our periodic update from you. Originally, beginning in November, I think you had anticipated maybe speeding that up a little bit, and then things slowed down again. Right now, if you had to guess, when do you think this tax legislation is going to pass?
I'm still sticking with my November date. And the reason is, I think there is a lot to be worked out yet in the Senate with the bill. And it's still the fight between, the tax bill and the things that everybody likes and are easy passes. They're easy yeses. The no tax on tips, I think for sure is going to go through. There's some other things that for sure are going to go through. They're not expensive, and they make people feel good. They're easy yeses. The hard part is that spending cuts and how much that certain members of the Senate want to stick to their guns and say, we're just not going to raise the deficit that much. And that means, well, they've got to cut programs or costs somewhere else. And it's easy to say in general, there's a lot of bloat out there, let's cut it. But every time you cut something, that affects a home district of some congressman or some senator. And so it always, what do they say? It's always easy to say, but until it's your ox getting gored, then it's then it becomes a much harder pill to swallow.
Absolutely.
So someone's got to take one for the team.
Yeah, it'll be interesting to see who ends up taking it. Well, great. That's great. So we'll continue to keep you all updated on what's going on with the tax bill. And it does sometimes feel, Eric, like it's like moving a million miles a minute, and then all of a sudden we're at a standstill. So a lot of economic news affecting the potential of movement here, but I've also haven't heard you update us much on actual specifics around what might have changed in the last week or two.
Yeah. So I think the positions, what's changed in the last couple of weeks is that the positions the senators are outlining right now are becoming public. What I don't know what's changing is behind closed doors. The Senate's trying to redraft this thing. And in general, there's not a great insight into that because that changes so often, I think, and never gets made public. So there's a certain amount of shielding that the public has to what they call the sausage making here as they make the deals to get this done. And all you can really do then is glean from press releases, truths, tweets on how people are thinking about this. And what we've got now, I think, is some more solidified positions from some senators that they can't all come together. They're not going to be able to find a win solution that gets everyone what they want. And that's the hard part now is, who's going to give in and how's this negotiation going to go? Are they going to end up raising the debt limit and passing this bill with a bunch of debt attached to it? They're going to end up trying to throw some spending cuts in there that don't seem to be popular with everyone. That's going to be the hard part. And, we're not going to see that, I think, until we see more proposals from the Senate. That's what we're waiting for now is what does the Senate bill look like?
Right.
We know what the House bill looks like. What does the Senate bill look like?
Right. So stay tuned. When we have a better sense of what that looks like, you will be the first to know, listener. So let's move on to our inbox, Eric. As always, listeners, you can send us your questions at bizbeat@sva.com or drop one at sva.com/bizbeat. Our question this week is, I'm already maximizing my 401k, but we have a 401k Roth option too. Which one should I be using?
Yeah, that's a good question. And we talk about this with clients all the time. The trade-offs being a regular 401k deduction from your paycheck now is an immediate deduction, and it helps you on your tax liability this year. A Roth 401k contribution does not help you on your tax liability this year because it goes in with after-tax dollars. How it does help you, though, is that the earnings tax-free, and then eventually when you take out those Roth 401k amounts at retirement, let's say, they're not subject to income tax anymore. So there's calculations you can go through to say, hey, which one should I do based on where my tax rates are? Rather than to get into all that, what I'd like to also talk about that you might have an option, as long as you're looking at 401k, is that some plans have been modified in the last couple of years with rule changes that you can now roll over your 401k pre-tax dollar amounts into a Roth 401k. So if you have a couple 100,000, let's say, in your 401k, you can pick an amount, say 20,000, 30,000, and roll it into a Roth 401k. So it's very flexible. What you might want to look at is, what is my income for the year? What's my income expected to be? And should I start moving dollars over from that pre-tax 401k account I have to a Roth 401k account? Now, it's not in every plan. A plan has to allow it. Just because the law allows it, which it does now, starting in 2023, just because the law allows it doesn't mean your plan allows it. So you've got the law about 401ks and what you can and can't do, but then you have your company plan, which is established and has all the rules on how you can contribute to it. Some plans allow it and some do not. So you have to start there with, say, your HR director or department and say, hey, do we have this option? And even if you don't, if enough people ask about it, we're finding that companies are starting to adopt it. So in general, it's easy enough to adopt to say, hey, we've got a 401k plan. We're going to amend it as a company, and we're now going to allow the Roth 401ks and the rollover amounts to be put in there. So it pays to at least ask about it and know what your option is. And then you can start looking at tax projections and saying, does it make sense if I start rolling things over, rolling amounts over from my regular 401k into my Roth 401k, pay tax along the way, but maybe I'm not paying a lot of tax right now, and now I'm going to build this up to be tax-free when I take it out at retirement.
And Eric, I'm just trying to think of a situation where somebody would want to do this. And I know, as you said, it's more difficult than just hey, here's a rule of thumb. There's calculations and all that needs to be figured out. But what would be sort of that main reason that somebody would look at and say, yeah, I want to roll this over now? Is it just like my income's going to go way up later, or how would you look at that?
Yeah, I generally look at it at income levels, because income levels determine your tax levels. The higher level of income you are, the higher tax rate you're generally in. So if you have a lot of income now and you maybe won't have a lot of income later, you might say, I'm not going to do these rollovers because when I take out this money later, sure, it'll be taxable, but I'll be in a low income tax bracket in retirement. However, you might be in a different situation where you've got a lot of retirement funds and assets, and you're going to be in a higher income situation in retirement than maybe you are at the end of your earning career. And so you may say, I'm going to take advantage of some of this now. I'm going to take advantage of what is a lower earnings now and lower income I have now. I'm going to roll some of this over tax-free as Roth dollars. I won't have as much tax then because I'm in a higher tax bracket, let's say in my retirement years.
So Eric, would an example of this be then, if you're a business owner, you have money in your 401k and your 401k plan allows for this, if you have one of those years where you're just it's not a very profitable year, that might be a time to think about doing this.
Yeah, absolutely.
Okay.
Absolutely.
Great. Well, thank you for answering that. And please, everybody, keep those questions coming. We love hearing from business owners and helping you all navigate this stuff. So that's a wrap on this week's Biz Beat by SVA. Make sure to subscribe on Apple Podcasts, on Spotify, and on YouTube so you never miss an episode. And share the show with someone you know who's running a business. If you want to submit a question or sign up for future updates, head over to sva.com/bizbeat. Our first 100 subscribers are entered to win an $100 Amazon gift card. And remember, as always, we're sharing general advice here. So keep in mind, your situation is unique. Contact an advisor if you have questions about anything we talked about today. If your advisor doesn't work at SVA, let's change that. And you can contact me. We can talk about how to make you a client. Thanks again for listening. And we will see you next week on the Biz Beat by SVA.
From tax tips to business trends, smart insights from trusted